Hi, good afternoon, everyone. Thank you for taking the time to join us on the webinar today for PPAs and beyond. Uh, my name is Marcel Dutoy. I'm the Commercial and Event Director here at VUCA Group for the energy portfolio. For those of you who don't know who we are, VUCA Group, we are an African-based conference and media agency with over 25 years experience in the energy, mining, retail, mobility, and green economy industry verticals. Welcome to our latest webinar in our series, which is part of the Commercial and Industrial Energy and Storage Summit series. The first one, which was launched in November last year in Johannesburg, and the following one, which will be taking place on the 27th and 28th of August in Lusaka. The intention of this webinar is to give a quick snapshot of some of the opportunities taking place in Zambia. It is our intention to host a significant portion of the Zambian economy within the commercial industrial sector, who are looking at engaging with partners, investors, and solution providers with an ambition of securing their future energy security. I'm sure everybody has a clear understanding what's happening in Zambia at the moment with the current drought crisis and its impact on energy security. So the summit, which is taking place in August this year, will be bringing together some of the top industrial decision makers and solution providers to engage on what some of the solutions are available to these organizations. Right now, we've assembled a great panel of industry experts, some which with active experience in Zambia. So at the moment, I would just like to hand over to our moderator, Mohammed Badisi, who will introduce you to the rest of the panel.
Thank you, Rich. Marcel. I'll say good afternoon, good morning, wherever you may be. Thank you for joining us today. It should be a really interesting discussion. I think now is a particularly interesting time to be focused on Zambia in particular, but also on the C&I space. For those of you who are familiar with the market in the region, C&I is a fast-growing sector, a fast-growing solution for those seeking energy security and sort of confidence in energy supply in the market. Last year in South Africa, for example, more capacity was added to the market from C&I projects actually than utility scale projects. And turning to Zambia, I think one of the reasons for, I'm sure many of you are joining us today, is that it is one of the most interesting markets in the continent at the moment. It is one of the fastest growing economies, GDP-wise. It's one of the best performing currencies on the continent at the moment, and also a dynamic energy market with a high degree of industrialization and large load demand from industrial customers. So just by way of introduction, my particular interest in this space, I'm an academic, a researcher, an advocate around energy access. I study power contracts and power projects all around the world. And I will say that I myself am looking forward to the conversation today just because Zambia is such an interesting place. And I think, worthy of the time we're setting aside for the discussion today. But you're here not to listen to me necessarily. I think we have 4 fantastic speakers and experts who are joining us with a diversity of perspectives for the conversation today. First, we have Brian Tahinduka, Head of Energy for Africa from Standard Bank, Joe Dean, Managing Director at Energy Carbon Management, Ian Griffiths, Country Director at Intersado Energy Limited in Zambia, and then our distinguished colleague joining us from the Zambian government, Rogers Muyangwa, who is the Senior Manager for Research and Pricing at the Energy Regulatory Board, ERB. And I'll say that I think we are going to focus on a couple different topics in our focus today, partially about project structures for those of you who are interested in, if I wanted to pursue a C&I project, if I wanted to contract for power in this way, what are those contracting mechanisms, be it PPAs or energy as a service? We'll talk a little bit about the regulatory environment. We'll talk a little bit about the economic considerations, and also just strategically how to approach these types of power projects in a way that's collaborative, that's mutually beneficial, for parties on all sides. But why don't we start with, I'm going to invite each one of the speakers to provide some opening remarks, just to set the tone and to share their perspective. Before we do that, I do want to remind our audience that you should be seeing a poll. I believe you'll see a QR code that you can scan to join the poll. We want to hear from you at the very outset. What brought you to this conversation? What are you looking for out of this session? We'll try and tailor some of the questions as we go along to the results of that poll. And in addition to that, for those of you who can see on the StreamYard platform, we have a comment section, an open comment section. Please feel free to start posting questions at any point in the discussion. We'll be monitoring that and pulling out questions in real time. You don't necessarily have to wait until the end of a speaker. So please answer the poll. Please start posting your questions, and please enjoy the conversation today. I'll turn first to Ian. Sorry, Rogers. Let's turn to you first. I think let's start with the state perspective, and really you sit in a unique position, having to regulate what, as I said, one of the most dynamic power markets on the continent at the moment. So we'd love to hear from you first. Thank you.
Thank you very much, Mohammed. And my name is Rogers Muyangwa, as you correctly pointed out. It's my pleasure to join the rest of the panel to discuss this very important topic today. So I am a senior manager at RB in the position of specifically senior manager research and pricing. And I have over 20 years of experience in the sector, covering tariff design, pricing, financial analysis, PPA reviews, and performance monitoring, as well as power sector reforms. So that's just a brief background about myself. Thank you very much.
Thank you, Rogers. And again, a real honor to have you join us today. We know how busy you are with your actual job. Thank you for taking the time to speak with us today. Ian, let's turn to you next.
Thank you. Hello, everybody. Ian Griffiths. I'm a resident of Zambia, have been for about 4 or 5 years. In EaaS, we are project developers and PPCs. And I've been in Zambia from the very start of some of these projects, given birth to them, and now hopefully they're about to get across the finish line. And I'm just very excited that Zambia is now a new, totally new dynamic than what it was a few years ago. And I'm looking forward to what we can bring out of this. Thank you.
Excellent. Thank you very much, Ian. Brian, we'll go to you next. Might be experiencing technical difficulties there. Joe, do you mind if we come to you, and we'll come back to Brian in a moment?
Not a problem. My name is Jodine. I'm representative of South African Energy Storage Association. I'm the chair. Both Business Unity South Africa Energy Committee. What else? I sit at NETLink, NECOM. So basically, I think my company's name is NHA Carbon Management, and we develop projects. We've got can I say wheeling mechanisms. We've done a lot of work in the space to prove everything that we try and do at a governmental level. But I should say 80% of my time is spent trying to unlock, enable, basically finance, technical solutions, and etc. at a policy level and at a governmental level, so that we can unleash the market. My dream is the Cape to Cairo. I believe that South Africa should have been the pinnacle in leading Africa. Africa is leading us now, so maybe we need to come learn. But we're going to meet each other in the middle, and we're going to make this happen. And yes, and by the way, storage works. Base, because I saw there was a lady that said she's excited to hear about storage. Believe me, it works. It unlocks everything.
Fantastic. Well, we've got facilitators, we've got developers, we've got regulators. I think we've got a good chunk of the discussion, perspectives we need for our discussion today. Just a note for the audience, Brian will be joining us for a moment, just having a brief bit of technical difficulties. But Rogers, if you don't mind, I'm going to come to you with the first question. So, as you mentioned, you have deep expertise in regulation, but in particular in reviewing, structuring, considering contracts. And I think for many of the folks joining us for the call today, who may be in a position of either actively developing, seeking to develop, seeking to invest in power projects on the continent, one of the key issues, one of the fundamental parts of power contract negotiation and formation is that power purchase agreement, that sort of foundational contract that establishes the revenue and really is the anchor for the financing for these projects. So, from your perspective, for those who are seeking a contract with ZESCO, what are, in your mind, the key terms or requirements? So what do the PPAs in Zambia require, and what is ZESCO looking for a mutually beneficial agreement at the moment?
Thank you very much, Mohammed. I think Ian summarized the key developments that are taking place in Zambia right now very correctly. The Zambian power market has substantially changed in the last couple of years with a number of key reforms that have taken place. But to address your question specifically, let me start by saying that from a regulatory perspective, one of the key functions that we perform as the ERB is to issue construction and activity-based licenses. So this simply means that the first thing that one needs to get is you need to get a construction permit for you to put up infrastructure as an independent IPP. The second thing is that you need to get a license. For IPPs, with the type of licenses that is issued by the ERB is a generation license. These are basically valid for a period of 30 years. So when you get a license, it's valid for 30 years. Now, coming to the key requirements that an IPP would need in order to secure a PPA, there are basically three perspectives you can look at this question. The first one is that you will need to have a draft power purchase agreement or a proposed power purchase agreement that has to address three sides of your business. The first one is that it has to comply with the governing pieces of legislation, which is basically the ERB Act and the Electricity Act, together with all the other statutory requirements that you need, the laws of Zambia in general. The second is that your PPA has to have commercial terms that basically speak to the commercial business of your business. I'll speak a little bit more about that. Then the third one is obviously that you will need to comply with the technical requirements of the industry as provided for by the grid code. So in order for your PPA to be considered complete, it has to address those three perspectives. And coming to the specific requirements, this simply now means that there are mandatory clauses that must be included in that specific PPA. Under Section 19 of the Electricity Act, for instance, it spells out the key mandatory requirements that you must ensure are provided for in your PPA. Just allow me to share with you specifically a few of those requirements. So the PPA must provide for the quantity of the power to be traded. The PPA must address the technical conditions. The PPA must address the scheduling of power. It must also address the specific responsibilities of supply and receipt of power. It must provide for sanctions for breach of the contract. It must also provide for payment terms or payment guarantees, as the case may be. You also have to provide for a tariff and a tariff structure in that particular PPA. Now, depending on the kind of technology that you are using, if it is dispatchable energy, then you will need to have a tariff that provides for both energy and capacity charges. If it's non-dispatchable, we accept that the tariff can be energy-based. It also must have provide for the duration of the PPA, so it must be specifically stated, in terms of the duration of that. If it's 20 years, it has to say it's 30 years. It has to say it's 30 years. Then it also has to provide for the review, the review of the PPAs. And then there are other additional requirements, but the ones that I've just specifically referred to, these are provided for in the Act. So these are non-negotiable. They are mandatory terms that the PPA must address. Now, to guide further, the ERB has developed what we are calling power supply or power purchase agreement review guidelines. So we have a set of guidelines that provide additional requirements that the PPA must have in order for the ERB to consider the PPA complete and grant approval or regulatory approval. The guidelines address those three sides of the business that I referred to: the technical issues, the legal issues, the commercial issues. Now, over and above the specific mandatory clauses that I've referred to, in the PPA guidelines, we also request that you specifically state the tariff in terms of the base tariff, and we also request that you provide for the average tariff, the effective tariff that the PPA will be trading the power at. Then we also require that you also provide for an escalation clause that states by what factor or index their tariff will be escalated on an annual basis in order to ensure that it remains cost-reflective pricing. As you know, the national energy policy requires that the tariffs that are charged in the sector are cost-reflective. So those, in a nutshell, are the key requirements that the PPA must address in order for the ERB to accept your PPA. Normally, once the two contracting parties have agreed, then you submit the proposed or draft PPA to the ERB for approval and review. And this is the ERB will give a determination or make a decision over the PPA within 30 days of submission of such a PPA. Let me stop over here for now, and if there are any specific questions, then we can address them as they come. Thank you.
No, that was very helpful. And I want to come to Ian just for if you want to add anything. But one quick question for you, Rogers. You mentioned the PPA guidelines. You mentioned the national regulation. Are there also, does ERB publish templates or any sort of starting point for PPAs, or is it just those mandatory terms are generally looked for in whatever format the PPA may be in?
We do not provide a standard template. I wouldn't say that we have a standard template, but if you look at the list of requirements that I've listed together with what is provided for in the PPA review guidelines, you would consider those to be some kind of a template, because it will basically specifically state what you must provide in. So in a way, that the requirements themselves provide some kind of a template that the PPAs must provide. But in terms of a standard template, we do not have a standard template. But if you look at the PPA guidelines, which are on our website, together with the mandatory requirements that I've made mention of, those will provide the key terms and requirements that you must meet as an IP.
Thank you, Roger. I think it's incredibly valuable, again, for those in the audience who are looking to develop projects. Ian, you're on the ground, you're developing these projects, you're negotiating these PPAs. Anything to add in terms of that perspective on what to look for in these contracts in the Zambian context? Oh, and Ian, you might be muted. Oh, good, go ahead.
Okay, so I'm there again. Just the good news is everything that Rogers has kindly laid out is available. They provide it. You don't have to invent anything. They help you all the way through this process. It sounds daunting. It's not. There's so many different facets from between ERB and ZESCO. You just got to fill in the boxes in the correct order, which is the most important thing. And really, it's quite standard. You don't have to come with all the ideas. It's fairly boilerplate, as we would say. So I think it's an easy process as long as you follow it in the correct order.
Thank you. Thank you for that sort of endorsement of the reality, experience on the ground as well. That's very helpful. I'm glad to share with the audience that Brian has joined us. We'll come to him in a moment. But first, Joe, I'd like to come to you with a question. You talked about sort of a realistic perspective and understanding of what solutions are available, be it battery storage or renewables. But let's just focus on renewables generally for a second. One of the criticisms, one of the concerns you hear in the marketplace, especially from large industrial customers who need a very stable, power baseload for their operations, is that given the intermittent nature of renewables, of solar, of wind, that they're somehow incompatible with, C&I, with commercial and industrial customers. From your experience, Joe, what have you explained to your clients, and what have you experienced that sort of does actually prove out that alignment, that possibility to match the intermittency of renewables with the needs of these industrial and commercial clients?
Okay, good question. Do we have all day? We only have a few minutes. Okay, so I think, well, for 10 years I've been doing the policy part and the governmental part, and bless our hearts, we do get somewhere. We obviously have a vertically integrated monopoly in South Africa, which is Eskom, but I mean, I think it's the same, par for the course across Africa. We have a very well fleshed out South African grid code, which could give challenges, can be seen as opportunity, can be seen as challenges. So in all of it, I got terribly frustrated because we were all hurry up and wait. And what we found was that there was a lot of despondent, possible EPCs, manufacturers, O&Ms, whichever you want, were all sort of shying away from Africa now, saying, oh, you know what, I think we're only going to be going in the small scale market, homes and houses and that, because nothing really substantial was getting off the ground. And I think we're probably a nation of fast followers. So it's really much the one goes first. So I was very well favored with a very big mining company. They have a 27 MB load at any specific point in time. And they approached me and they said to me, look, we've been possibly doing the IPP route with this, but can we do a project off balance sheet and do an IPP later? But let's just get this project going, because one, they had huge ESG constraints because it's a gold mine, so it's World Gold Council, all the compliances there. Two, they were looking for expansion. But what is so important, I think everybody misses that conversation, is with manufacturing heavy industries, whether it be a mine, a foundry, or a manufacturing enterprise, they all have a life. So with mine, we talk about life of mine, and they need to expand this. And the one common denominator with all of them is, one, the price of power, the security of our power, and the availability. And those were the things that challenged. And then also, thanks to the ESG, thou shalt be green. You know what I mean? So they all sit back and say, well, look, how are we going to proposition this? How are we going to sort of match all of this? So they took a chance on me. They said, well, would you come and develop and build this project for us, and if we can refinance it? When I first set out on it, I thought, wow, that was great. Then load shedding hit South Africa. And they suddenly said, I want security of supply. You need to be able to respond within a seventh of a millisecond. You know what I mean? And it was all of these attributes that came. And I'm very, very proud to say we passed muster. It's not as if we were in any way a developer, IPC, or anything else. We really had to learn thick and fast how to do all of the permits, all the regulations, how to do the designs. And I can say now, for anybody to come see, we built it as a POC for industry. We've got a 60 megawatt PV project that's hybridized with a 42 megawatt hour battery, 187 megawatt hour installed capacity, behind the meter, servicing a load. And I'm telling you now, I'm looking at my phone. If any of our systems go off, within minutes, I've got to respond. My SLAs, I've got to have uptime in a minute. All right. If they lose that, the mine pays out something like 60 million rand an hour in lost production. We are joining two loads. We've got a load at the mine, 11 kilometers away. We've got a tailings dam. We're supporting both loads. We built 32 kilometers, 11.2 kilometers of 33 kV overhead lines, twin. We built an 88 kV substation upgrade so that we could export, and we packaged the whole thing by overscaling. So what we're doing is, it's overscaled at 60 megawatts, 42 megawatt hour battery. Load is 24/7. I support them 24/7. The rest of my power I'm evacuating out into the grid. Evacuating out into the grid is your very much debated wheeling, but we are wheeling. So obviously you don't give security of supply to your wheeled entities, but we do give them the benefit of a saving, and in that they're paying off the asset. The ROI is 4.2 years on a 3 billion rand project. So that proved everything. We had everything thrown at us. We had grid conditions. South Africa's grid is very unstable. We've got frequency issues and that, and we've come to the muster with the base. So there was a lady that was in the very beginning of this conversation. I can't remember where she was. I'm trying to go back on your question, but she said, I'm excited to hear about base. And I think this is what I'm trying to say is, it's not about it is about which technology you use, but let's not go to OEM level. Let's just go to does this technology work? Can it work? Will it work? Can I put it down? When we had PV, when PV entered into South Africa, we all had the rebrowns and the auctions. That went on for years, guys, for people just to have faith does a PV panel work. And then we had intermittency. So then we had 100 projects, and they said, oh, goodness, what do we do now? We've got a duck curve. Now we want to start curtailing. And in March, base. But base is so nascent that within 2 years, we've actually got, sort of conviction. And I think what was a blessing in disguise was things like load shedding, because that sort of drove people to take in the plunge, whether you were a homeowner or from whichever entity you came from. So I think if I had to speak, I can say, the regulatory environment is very important to get the support, but I think governments are in support. We've listened to the gentleman just now. We've heard Ian testify to that. It is about understanding all the permits. It is about having those discussions. It is about building the relationship with your network provider. So Eskom is ours. And we had to do what they call RETIC. RETIC, our project is the first project in the country that's got RETIC for a hybrid. We've written that portion of the grid code, and that's why I'm here today. Is because I said I want to share this. We didn't do this knowledge or this project for ourselves. We did it so that we could replicate, so that we could encourage others to do the same. Because now you don't have these difficult lenders conversations. Why could the mine not do this before? Because the lenders were saying, "I want to see this. I want to see this." I believe me, a lender or 3 billion can come up more reasons why something's going to go wrong. I'm telling you, that conversation can go on for 3 years before you could actually, once the lenders bring in their LTAs and all the different things. But when they have something that they can buy traction, when they can see it's existing, even my wheeling, everyone said, but Joe, did you read? I'm wheeling to 7 entities. I'm wheeling to 7, 6 of them are Eskom entities. One is actually behind a municipal meter, 2 entities behind the meter. So we built in every element to be able to prove it. So I think after all of that, my long message to everybody is it can be done. And we need to share knowledge. We need to have these type of things. We need to reach out. We need to make ourselves available to share the knowledge, because you're not going to own everything. You can't own every project. You know what I mean? You should be willing to I can say, be the one that goes first, or the one that went first, or went before. I don't know what the saying is, so that we can do this. I invite anybody to come and see the project. I would make my electrical team available, civils teams, mechanical teams, any of those, to discuss, and even from a financial point of view, because I have had more audience conversations with banks than with anybody else, trying to leverage something in this market. And just for interest, so we decided to do one step further. We've now got a wind farm, also for a mine. We're doing a wind farm with a PV farm with huge base. So the next story is for next year.
Well, and you teed it up perfectly, because we'll turn to our lender in a second. Brian's with us now, but I just want to reiterate for the audience to make clear what you're saying. I mean, you have installed, operating, and proven a durable, resilient, and a sort of reliable solution based on solar and battery for an industrial customer. This is not theoretical. I mean, you are serving their unique industrial needs. Actually, you're saying two different demand loads, but I mean, I think it's exactly what the question is asking. That's a fantastic experience that you're
It's
sharing.
grid forming. It's grid forming. We did Black Start. We've kept everything. Our system operator, Eskom, has approached us now to look at how can they table the ancillary service charges for others, and they're going to benchmark them against us, which is brilliant, because it's everything with base and with hybridization. The ROI is there. It just, you need to know how to structure it. That's the thing. You need to be able to convince where the savings is, and the savings is built up in a multiple sort of ways. It's almost like we had silos, because if you think of it, on this project, we had to do that 88 kV upgrade so that we could export. I mean, that was a good substantial amount of money. I mean, we took an 11 kV. We actually, they had 2 supply points. We took the 11 kV on the 6.6 and consolidated and made an 88. And this is that network that we want to do.
Just real quick, because I want to come to Brian, but that story, the technical modifications, that we're getting questions about it as well. Let's come back to that in just a second. I don't want to cut you off there, so we can have more time for that in just a second. Brian, if I can, just to connect exactly what Joe was saying, that part of the conversation, part of the stakeholder, part of the team at the end of the day for making these projects a reality. We've talked about the regulatory environment, we've talked about developers like Ian, Joe is the one who's finding and sort of integrating these solutions, but obviously the money matters. And we're talking about the requirements for PPAs from Roger's perspective. That's the paper requirements. What is the regulator looking for? You as a bank are also looking at those contracts. You're also looking at the agreements underlying these projects and determining their bankability, the ability of the bank to feel comfortable investing and lending to these projects. So can you give us some perspective as to, from where you sit, when you're seeing these projects come across your desk, technically brilliant proposals, reformed regulatory environments, but you still have to run the numbers. I mean, what does that exercise look like? What are you looking for in these projects to sort of become confident in their bankability?
Right. Thank you very much. Very good afternoon, everyone. Apologies, the system kicked me out at the beginning, but I'm back. I just want to start with a statement that says, without a bankable PPA, no matter how technically sound the project is, financially, the financing will not flow. So it is important to understand that the bankability of a bankable PPA is the beginning or the foundation for each project. And when we're looking at a PPA, I think I can break it down into 7 fields, and I'll start with 1. So those are the characteristics of a bankable PPA. So 1, we're talking about longevity of the contract, and this is usually sufficient duration to allow the power purchase producer to recover investment costs and earn a return. And usually we're talking about 15 to 25, based on which the size of the project and the off-taker. And then there is the other piece around the tariff, whether it's fixed or indexed. So fixed rate could be a clearly defined tariff structure that may be fixed, or you have what we call an inflation index tariff. And then there is ability, there is what we call your tariff does reflect what we call the competitive levelized cost of energy, which to make sure it's attractive to investors and remains affordable to the utility or the commercial buyer. So 2 things here: it has to be competitive, and then it has to be attractive to the investor, but at the same time, it has to be a very affordable for the utility and also the commercial buyer, because they are your off-takers. Then the other side, the other piece for bankability is on the take-or-pay clause, what we usually call in some markets deemed energy clause, to ensure that the off-taker pays for a minimum contract capacity regardless of consumption. Then also what it does to the financier, it provides what we call revenue assurance that lenders rely on. The other component of the PPA is on the credibility of the off-taker. It could be a ZESCO, it could be a power, a trading company in the market, or it could be a private entity. It could be a mining client, can be an agribusiness, manufacturing, any client in any sector as an off-taker. So it is very important that you have a creditworthy off-taker that provides some level of comfort to the funder or the investor on the transaction, to ensure that they take comfort on that piece. The other part is on the payment security. So most PPAs come with what we call escrow accounts for the whole tenure, whether it's 15, 20, or 25. Then what happens is you have those flows coming in on a monthly, quarterly, biannually, or an annual basis, but the most common payment structures is usually on a monthly and quarterly basis. Then we have also seen a good mix of guarantees, where we have private sector guarantees, payment guarantees coming in for some from different entities, and then we see intervention where you have government bringing in some sovereign guarantees to provide further comfort when it comes to some projects that are utility based. Then also what happens is we've also seen some companies bringing in what we call a debt service account, where you guaranteed, especially the power purchase, the power dealers or the middlemen in the market between the generation and the distribution companies, where they provide liquidity and they can give comfort or payments for 6 to 12 months ahead to de-risk those PPAs to be bankable. The last piece, which is extremely very important, is on the comprehensive risk assessment and allocation, which covers the political, regulatory, and then what we've seen also, we've seen some companies, partial risk guarantee entities coming in to de-risk the projects. We've seen insurance companies coming in to also provide some instruments that can help to de-risk some of the assessed risks. And then on the bankability financial model, very key and very important, that covers a verified leveraged cost of electricity, a realistic IR assumptions. There is clarity on the calculated tariff based on CAPEX, OPEX, and debt terms. And then also you have supporting documentation for bankability. The other part is on to strengthen the PPA bankability, developers must produce some of the documents that we require. You need to have a very well detailed technical and what we call financial viability assessment, which is covered in the feasibility study, the environmental and social impact assessment to meet national level regulatory requirements if you're dealing with Zambia. But then also you might find your funders or your EPC developers or the target market is a pool of internationals. So you have to blend both local and international coverage when it comes to your environmental and social impact to make sure both entities are taken care of. There is also the environmental brief, project brief for the regulatory approval that needs to be done. Then you need to go through the licensing and permitting, which covers the construction and the generation license. Then robust financial model, of course, I spoke about that. Then the offtake agreements, whether it's a ZESCO or a private sector or it's a private buyer in the market, there is a requirement to make sure you have that clear offtake agreements in place. And then the guarantees, the guarantees that and also what we call PPA mitigation instruments that are required to come in to support and provide further for further de-risking. And then the last one is I think the representative from Zambia did speak about this, a well-structured PPA that covers all fields in terms of your tariff, your payments, and goes even clearly comes out on the force majeure, what happens in terms of termination, compensation, curtailing clauses, and dispute resolution, to make sure from a legal perspective, as a developer, off-taker, and the parties within the transaction, if it's funders on our side, there is comfort that everyone is comfortable from a PPA detail perspective. Thank you. Over to you, Mohammed.
Thank you, Brian. I think for the audience, what you've done so well in explaining is that as much as there is deep and important work on the physical engineering of these projects, the technical solutions, you're talking about the financial engineering, the flow of revenues, the security of revenues, the security of what happens in case of a termination event or a force majeure event. I think you've given the audience a good understanding of just how much attention has to be paid to those financial structuring questions as well. So thank you for that. We're approaching we're a little bit past the halfway point. So I want to skip to a few key questions, for our panelists, and then open it up at the end. The last 15 minutes we'll have for audience questions. So again, please keep continuing adding those questions in the comments. But let me come to Rogers once again, and just to ask a general question here, which is that we're talking about Zambia as an incredibly dynamic market. Major reforms underway, a growing economy, a lot of opportunity. Energy access and sort of energy availability remains a challenge for some. Roughly 1 in 5 businesses do list stability of energy supply as a challenge. So if you could explain for us generally, what your institution and what the government more generally is doing to better secure supply for customers, for industrial customers in particular, and also to solicit that investment to increase that supply going forward. So what are those efforts that you think everybody in the audience should be aware of?
Thank you, Mohammed. That's a very important question, especially given the fact that we are in a situation of load shedding. We have limited capacity as a result of the very reduced water levels in the sector, and therefore we have been experiencing a lot of hours of load shedding. So to address your question, I think that the Zambian power market has seen very significant changes never seen in the last 20 years before. The government has taken very bold steps to reform the sector, starting with the development of the new national energy policy of 2019, which seeks to promote the private sector in terms of leading developments in the sector, and also to break down the barriers to competition and market entry, and also trying to create a market that will allow for power trading. So the National Energy Policy of 2019 recognizes the fact that we need private investors, IPPs, in the sector, and therefore promulgates or calls for cost-reflective pricing in the sector. So all PPAs that are approved in the sector now are approved at cost-reflective pricing. So the policy is very clear about that all pricing should be cost-reflective. Then, of course, the second thing is that the government has also liberalized the market further. by declaring open access. In June last year, Cabinet approved the open access statutory instrument number 40 of 2024, which has essentially opened up the market further by providing for third-party access to the transmission and distribution lines in the sector. We have also seen a Cabinet approving the new market design, in the sector, which essentially has provided for bulk power trading. So now it is possible for direct contracting between IPPs and end-use consumers on the principle of willing buyer, willing seller. So you do not necessarily have to contract or sell your power to ZESCO as the case was before. You can actually find your own, as an IPP, you can find your own bulk of your packet, or indeed export. So that's quite a significant development from a policy perspective. The other issue is that in terms of licensing, the Act is very clear now. Before, it was open-ended. When you put in your application for a license, it did not specifically state within which period your license will be guaranteed. But now it specifically says that your license, from the time you lodge in your application, if you meet all the requirements, you will be granted a license within a period of 60 days. If the ERB fails to do that, then your application is deemed as approved. So that's quite a very significant, I think, step for us in the sector. The other measures also include the fact that we do approve these PPAs. The Act again has specifically stated that once you lodge in your application and everything is in order, the ERB is required to make a determination within 30 days of having made that application. However, in terms of fast tracking, in order to mitigate the situation that we are in now and to facilitate power trading, we are able as the ERB to review PPAs within a space of 48 hours from a time of submission to the time of the board approval. So that's a challenge that we have given ourselves, and we try by all means to ensure that once we get a PPA, we review and approve such a PPA within a period of 48 hours. So these are quite a few of the things that have happened in the sector, and we think the market is open for business, and we are responding to the needs of the market to ensure that the sector develops and that we facilitate power trading. Let me stop here for now.
Well, thank you for that, Roger. That's fascinating. I mean, we talk so much about energy efficiency, but you're talking about regulatory efficiency. I mean, those timelines that you're discussing are really impressive. Ian, if we can come to you, I mean, again, asking from the reality on the ground, when you look at this market, this transforming market, this reforming market in Zambia, what concerns do you have? What do you see from that long-term sort of business perspective as you're putting your capital to work? What do you see as challenges in the next 10, 15, 20 years?
Okay, so for us, our biggest, not concern, it's a reality. The bubble on solar will burst probably within 18 to 24 months. The grid can only take so much. And so that's the long-term business plan stop date in our view. Obviously, beyond that, you're just doing service delivery. That's very different. But for developers, we all need to be lined up. And although the government of Zambia have given out a lot of feasibility studies, it's hard to find a coordinated plan of who else. You could be doing a study with someone in the field next door with the same rights. But I think all I will, ZESCO and others, I encourage them to do is to let's have some more collective talks where we map out who's doing what over the next 18, 24 months. Everything that they've done so far has been extremely useful. I mean, the transition, the change in the last few years is phenomenal. It is open for business, and there is plenty for everybody, but there will come a peak or a stop date before the grid is soaked. So it's a good experience, and I look forward to seeing everybody here in August, and we can talk about it.
I love that positive outlook. I mean, a sober but positive outlook. I really appreciate that, Ian. Thank you. Brian, if I could turn to you, I mean, from the perspective of the bank, when you're looking at the Zambian market, when you're thinking of opportunities for you to lend to viable bankable projects, what do you see Standard Bank's role? How are you participating in some ways? We're talking about this new chapter in the evolution of the Zambian market.
No, thank you. So Standard Bank Group, as the largest African bank in Africa, we are focused on supporting markets to grow. And if you look at what has happened to Zambia with the energy crisis and road shedding, there is need to strengthen and continue build resilience from an energy perspective. And then also, if you look at the energy access rates, it's one of the countries with low energy access rates. So there is requirement to ensure we bring everyone online while we're leaving no one behind. So with that, we open and looking for opportunities where we supporting our clients and other clients in the market that are looking for self-sufficiency in terms of energy security. But then also there is the energy cost piece where you have recent technologies, whether solar, whether biomass, and other technologies that are providing much lower cost reflective tariff and are giving economies of scale. And then the other piece is on the energy security part, where we're focusing on supporting government to be energy secure, but also individual customers to focus on their energy security. So it is very important to us as a bank and as a group in Africa. And also it is very clear that for us to achieve this, it is through partnerships and further collaboration with parties, the likes of Ian, Joe, and Rogers from a government perspective, from a private sector perspective, and any other party that is creating a voice like VUCA Group, a panel or a space to convene and discuss solutions for the sector. So to us as a bank, it is more to continue reaffirm our commitment to support the evolution of the energy sector in Zambia and then also Africa, and then be able to bank as many projects as we can as long as they're bankable, from small SMEs to medium and corporate entities at an utility level. Thank you.
Thank you, Brian. Very, very helpful. And Joe, I want to come to you. We've saved the best for last. I mean, I appreciated the practicality of your last explanation of how you're able to find these solutions for industrial customers. I mean, when you think of mutually beneficial, I think, the phrase we've been using is these sort of symbiotic solutions, win-win, win-win-win solutions for everybody across the board. What do you think the audience should do? What makes it possible to have those sort of mutually beneficial outcomes?
Yeah, I think based off this, we developed a mechanism which we're launching in South Africa. Dwayne, sorry, I just have one of my colleagues there. Okay, so what we did is we developed something which is almost like the pool. So I think everybody's heard of the South African power pool, the engagement between the countries. And remember when I've said that we had to we want to create a Cape Town to Cairo philosophy. So what we've created is the national pools, which we want to, it's for the country. It's not. So I'm not too sure what you have in Zambia in the different areas, but what we have now is emerging as traders. So traders are willing buy, willing sell, or you have aggregators. But what we needed to do was, the challenge is that when you have a trader and you have an aggregator, you have something that's central in the middle. The bank looks at the trader or the aggregator and says, can I bank this trader? Can I bank this aggregator? And you don't have this seamless transition between the off-takers and between the generators. So we've created this mechanism. I'm flying to Cape Town tonight, as you heard. We're actually launching it tomorrow. We've got the South African Renewable Energy Master Plan, and it's one of the elements that we want to give to the country. So we've had it viewed by every legal entity that ever exists. We've had it done at Asilka has given it a ticket. It's not a trader, it's not an aggregator. Now, if a country has a mechanism like this, and they can integrate a grouping of generators that are made up of sugar bagasse and PV and base, and that you take away the intermittency, and if you can bank together a group of the off-takers. Now, take for instance in Zambia, they have large mining entities that need to be able, so they need to be able to switch and swap power. So they bank each other. So when you aggregate, but if you aggregate generation and you aggregate off-take, you create a seamless transition for the country, for the network, so that you can ensure grid stability. There's quite a bit that I want to tell about, but I'm saying is we want to unlock something within all of the African markets that the banks would also regard as bankable, because the holy grail to any project is, one, is it technically sound, and two, is it bankable? After that, you've got good projects. But we're not looking at the bigger picture, and everybody's working in these little isolations. So what you find in South Africa is every generator is competing with each other. They're all competing for that grid access instead of making them mutually bonded in a pool, because then Bob doesn't care if Pete's in there as long as both have got their offtake. Do you understand? But they balance as well for each other. So it de-risks it from banks level. So the banks are quite enthusiastic. Well, they are very enthusiastic about it. Standard Bank and the other banks are very enthusiastic about it in the sense that it de-risks that project, because there is always an off-taker for every kilowatt hour. The big challenge on that, just from a banking perspective, and just a word of caution, is you have to get bankability of the off-takers. So the banks are very... and I hope Brian's got his fingers in his ears. The banks are very conservative from looking at who the off-taker is. So they will do a lot of credit vetting. So what we've done is we've pulled numerous off-takers. So you overscale the demand. So we've now signed up, say, for instance, South Africa, 1,500 megawatts of committed demand. But we only have generation of 60 or 70. So the bank just looks at the anchor. Can I say, Brian will understand this, you know what I mean? It looks at the anchor tenants that are in the pool and say, okay, they carry the others through. And then you can put some of the others in that are almost like points of last resource. But what the country needs to do is the country needs to be the element of last resource. So once the generator has supplied the power and the off-taker has supplied the power, if there had to be power that was unserved, then the grid can utilize it from it. If you do this mechanism, you're not cherry picking behind the grid. You're working in a symbiotic relationship with the grid, and you're paying for what we call is the wires, which is a different concept to buying and selling. Buying and selling, I'm not criticizing it. Buying and selling is great. Traders are great. Aggregators are great. But you needed some more mechanisms to plump up that can, I say, almost base load. We're not allowed to say base load these days. it's a way, but that sort of baseline power by blending. I mean, if I can show you, I'm doing work on a modeling. That's all I do is model for financial reviews now and loads and things. If I took a smelter and I modeled PV and wind farms, and I can net their total supply, and it's at the low. I heard all these things about cost reflective. It's far under the grid's tariff. So in other words, you're still supporting the grid in their fees, because we need to keep the grids alive. We need to sustain them, but they need to become transmission and distribution, and we need to encourage generation, mass generation. You're on mute, Mohammed.
Thank you very much.
Mohammed's on mute.
Yeah, there we go. I was going to say that, thank you for that explanation. Before we wrap up here, let me ask one meta question, and then we'll give everybody a chance to sort of leave us with a few sentences at the end, sort of a parting thought. But it's been brought up a couple of times in this conversation already, a natural comparison, I think, to the market in South Africa. Rogers, I'll ask you a technical question, and then Ian and everybody else, I'd ask, sort of your opinion. But when we think about the South African market, which has become a bit more structured, there's the sort of formal renewable energy auction program, and there are non-negotiable PPAs that are standardized for that. But as it stands in Zambia today, just to clarify for the audience, you can still approach directly ZESCO with unsolicited bids. I believe that's correct. I don't know if auctions are also being planned, but just to make sure we compare apples to apples and oranges to oranges, you haven't adopted the strict procurement structure that they have in South Africa yet. Is that correct?
Yes, when we compare the Zambian situation to South Africa, no, we do not have a structured procurement framework like they do have in South Africa, but there is work ongoing right now to come up with such kind of procurement framework. What is happening right now is that for an unsolicited bid, for instance, you need to go through the Ministry of Energy. There is an agency there called the Office for the Promotion of Private Power development. So you go to that office and then you negotiate with them. Essentially, they do have rights to all the potential sites, and they've done a number of feasibility studies for some of them. So that's the office that you go through. Thank you.
Thank you very much. Ian, and I'll ask Brian as well, anything that you think, those may be coming from the South African market, turning their eyes towards Zambia should be aware of, and compare and contrast, similarities or differences? Ian, why don't we go to you first? Oh, and you're on mute. I apologize.
Sorry, can you just repeat the question?
Sorry, for those who are looking at the Zambian market opportunity coming from the South African market, any comparisons or significant differences or similarities you think they should be aware of?
Okay. The good thing about Zambia is we're learning from the South African model. So we've watched the whole ESCOM piece and everything over the past, let's say, at least 8 years. Lessons have been learned. Zambia has taken those to heart. So you can guarantee when you come here, especially on the industrial side as well, that South Africa has done all the homework and the hard work. Now Zambia has learned from those mistakes. Well, not always mistakes, but those hard-earned lessons. And so I would anyone to come in August and say, hey, wow, we've got a chance here to not repeat the same mistakes, but also to learn from the successes of South Africa. So definitely see you in August.
Thank you, and I appreciate that. There's a consciousness and an appreciation of those lessons from South Africa. That's very helpful. Brian, anything to share? I mean, for those who, again, are maybe coming from one market and going to the next, any perspectives to share?
Yes, no, thank you very much. So maybe what I can mention is, as I did at the beginning, Standard Bank, we're in 20 markets, and those African markets, they have different currencies. So, and we've seen projects that are in hard currency, and then there's a local currency requirement. Even if you do mobilization of funding in hard currency, there is a requirement of a local currency presence, especially during construction period, and some of the PPA are in local currency. So what we do is, as a bank, we bring in that benefit, that advantage. We anchor you as a developer, as an EPC, as an entrepreneur or an off-taker in that market to ensure that we provide that local currency mix in your market. We also have what we call an offshore operation, where we have operations in Mauritius, Jersey, and Isle of Man. If you're looking for having a procurement hub and you need support with that kind of operation, we'll be ready available to support you. In terms of funding, we are open for business, both at a utility level and small projects. So the ones that are classified as embedded projects, we do provide funding on balance sheet of the off-takers, but we also do funding for lease or PPA structures. We also provide CapEx financing for any procurement that is required. The other piece is everyone always thinks about projects and they think about dates, but there is the transaction piece that is required, ability to transact everywhere you are. If you are like Joe and you are based in South Africa, but you have operations in the in SADC or in East Africa, she spoke about Cape Town to Cairo. If you're going to operate in those markets, you need a digital platform that is able and capable to support you on the transactability perspective. And then there's also the cross-currency protection requirements. And then what we do as a bank, we do not only provide transactional and debt solutions, we also provide the advisory. If you need support on the local and regulatory environment, if you need support on bringing multiple lenders in one pool from an advisory perspective, as a bank, we also do that. So, Mohammed, we are a fully fledged service financial institution. We play at multiple levels. We have a corporate and investment banking arm that looks at large, big utility projects. We have our business and commercial banking that focuses on the smaller projects. And then we also the personal banking that focuses on the individual bankings. And then we have the asset management, which has insurance and other operations of the bank. So we can fully support you in whatever angle you come through, and we're able to support you as a business.
Well, excellent. I mean, so I think let's wrap this up. I mean, again, we've had a great discussion today. We've talked about the opportunities, the changing nature of the market, and sort of the shifting dynamics, the positive dynamics in Zambia. But I want to hear it from everybody here. We'll go in reverse order. We will go Joe, and then Ian, and then Brian, and then Rogers. We'll close with you. But in just a few sentences, what inspirational message, what forward-looking message do you want to leave for the audience as they look forward to opportunities, they look forward to the meeting, in August? What parting thoughts there? So Joe, will come to you first in just a few sentences. What do you want to leave us with today?
I was battling with the mute button. So I think that the main thing I said, that we should be learning from each other. I think we should be reaching out to each other. I think intergovernmentally we need to, Rogers has, as indicated, the learnings that they've done. So I think that we need one collective whole where we have a center repository. Maybe ESI is that platform of learnings, of understanding. I think a lot of people when you enter a country, they don't know, Rogers. They look at it and say, oh, how do I do this? How do I do that? Ian, you marked it, said clear space in that. I think we need to get the banks involved. I think the banks really need to be more participative. And Standard Bank, you can't have it all. So maybe you need to get your peers from Nedbank and from Investec and RMB in. I know that you're the leaders in Africa. You are the leaders in renewables, but you normally do cooperation agreements. But somehow we need to get it mobilized. And mobilization is by sharing the learnings, putting the tables on it. And I think some of us being brave enough to put our hands up and saying, I'll help you. I'll give you that reaching out hand. I think Rogers would. I know Ian would. Brian definitely. We need to maybe have a plenary in Zambia, or a what do you call these things when you all get together? Some kind of 2-day sort of worthwhile engagement in that. But to tell you that it can happen, yes, it can. And you just have to be the one that goes first, and you have to kick the doors down, and off we go. Time is wasting.
No, thank you, Joe. Ian, to you.
As I said before, just looking forward to seeing everybody there. We've got such a diversity of people with different requirements. I need to speak to someone about putting solar on the roof of my chicken shed. Don't know how to do that, but we can build a solar farm. So let's all get together, share our ideas, and enjoy Zambia, because it's definitely worth coming.
Lovely. Brian, to you.
Thank you. I would like to start with our mission statement, which is Africa is our home, we drive our growth. Zambia is our home, we drive our growth. We are ready to get our hands dirty to support the evolution, the innovation, the co-creation to solve the energy challenges in Zambia, and then also continue extending our hand into other African markets. There is a huge problem statement on the number of people with no access to electricity, number of people with no access to clean cooking, and then the requirement around creating energy security in Africa. And as a bank, we're ready, because we do believe that we need to take care of our home, and we're ready to support that kind of movement. Thank you.
Fantastic. Rogers, we'll turn to you. I think you appropriately will have the last word.
Thank you very much. First of all, thank you very much for having accorded me an opportunity to participate in this. I think it has been a great conversation. As a regulator, we have learned our lessons. We have looked around the region, and we are learning from what is happening across the region. And obviously, our goal is to continue to refine our regulatory frameworks to ensure that we respond to the needs of the market. And borrowing from Brian, I will say that we try by all means to live by our motto, which says we safeguard your interests. So we are trying very hard to ensure that we respond to the needs of the market in terms of private investment, to encourage private investment in Zambia. And I think that's all. Thanks very much. It's been a great conversation. Looking forward to interacting more with everyone. Have a good day.
Lovely. Well, thank you everyone for your time today. Thank you to our panelists. The virtual applause is echoing across the internet for your time today. I will say you've heard about the opportunities in Zambia, a dynamic market, a dedicated regulator, experienced developers, and the support from the banking sector and from visionaries, such as Joe. So thank you everybody for your time today. And I think we're looking forward to continuing that conversation in August. But again, for today, thank you everybody for your time and for your contributions.
Thanks, everyone. Bye.
Brilliant. Great, guys.